The government can carry infinite debt for free. The world can continue borrowing cheap money. Everyone's getting richer and no one's complaining. Okay, so then what changed? Why did they have to raise their interest rates? It's because of something that happened that was the pandemic, which led to trillions and trillions of dollars flooding the market. There were broken supply chains, right? Energy prices went way up, and the whole world got inflation. By 2022, Japan got 2% inflation for the first time in decades. So the Bank of Japan was like, okay, we've got some inflation. What do we do? All these other countries are raising their interest rates to fight inflation. Well, look, the US raised interest rates to 5%. That's a lot. Europe's doing it. Canada's doing it. What do we do? I know, let's not raise interest rates. We also have 200% of debt to GDP. Let's do nothing. Let's not rock the boat. Japan held their interest rates at zero and hoped that inflation would go away. That decision started to break their money, the yen. Because think about what happened when the US pays 5% on cash and Japan pays zero. What happens? Money continues to flow out of the yen and into dollars. There's no demand for yen, so the strength of the yen collapses from around 110 per dollar to 150, then 160. That might continue working if the country was self-sustaining, right? But Japan almost no natural resources of their own. They make arguably the best culture in the world, right? The best food and Pokemon cards, and I personally love Japan, but they don't make their own oil, right? They import almost all of their energy, and all of it is priced in dollars. So a collapsing yen means everything that Japan buys from the world gets more expensive for them, which means more inflation, which means more pressure on their yen. And all of that pressure eventually leads to the biggest change that economists thought would never happen to Japan. That change was a change to their psychology and culture. What does that mean? It means people now want a pay raise. You see, for 30 years, Japanese workers never really asked for pay raises because mostly that's a Western idea, because their prices never went up. So why would you need a pay raise? 0% inflation froze Japan's need for pay raises. Once inflation started to happen, workers started demanding those pay raises and they started getting them. They got the biggest pay raises in over 3 decades. And once wages and prices start chasing each other higher, it's really hard to put that genie back. But then things started to get worse because the world got this oil shock from the war in the Middle East, pushing energy costs even higher. And they got a new government in Tokyo that wanted to spend even more, meaning they wanted to issue more bonds, aka more debt, at a time they already have an insanely high debt to GDP. So now Japan is at a crossroads. They have 2 options. Option: keep rates at, keep their high levels of debt manageable, and watch the yen get destroyed. Okay, watch inflation eat their retirees' savings. Basically, watch a country of savers get poorer every single month. That option could eventually lead to a revolution. So you have increase interest rates to save the yen. Now, picking option 2 means that 200% of debt to GDP, that starts accruing real interest. The bond market that's been asleep for 30 years starts to wake up. The Bank of Japan, remember, owns half of the, so they'll start bleeding losses on their own balance sheet. They need to start paying interest on their very high level.